Good morning, everybody. This is the live market open for Friday, Good Friday, January 22nd. I'm Yohay Elam of ForexCrunch.com and Market Movers Podcast, doing the show as every morning for FX Street. As usual, we'll talk about what happened recently in markets at various charts and levels. The next 24 hours, in this case, a bit less than 24. We'll also talk about next week's event and, of course, answering your questions. If you cannot see the chat box under the screen, or if you cannot see the video, please refresh. Anyway, the address of the chat is here below, kilkit.io/fxstreet-forex-live-video. Good morning, everybody. Yesterday we had the Draghi show, and of course that's left, front, and center. So, Draghi, of course the ECB did not change its policy, 0.05 interest rate, minus 0.30 deposit rate, negative, and no change in the QE program. But he began the press conference. He was looking sharp and said that Happy New Year, happy 2016. What we know from 2016 is we have new downside risks. That sent Euro down with the downside risks. And then he said that basically they're ready to act in March. In March, they'll have new forecasts, including for 2018. So very far in the future regarding inflation. He also said that inflation, due to the fall in oil prices, could turn negative. Okay, he said that during 2016, then it could sort of recover. But he also said that this fall in oil prices, first of all, it has been a fall of about 40% since the last time the ECB made its forecasts, since the cutoff for the forecasts. And also, he also said that oil prices do not just, add some value to consumers, but they can infiltrate into other prices and push prices lower, inflation in general, to the downside. Okay, so it's negative as well. He said sort of all the right things to tell markets that he's ready to act. He just also repeated that several times, and that made things clear. He didn't promise anything specific, not QE, not a negative deposit rate, but of course, and the ECB is data dependent. We have, for example, inflation figures coming up and things like that, but he made it clear that they're ready to act, okay? So that was Draghi. That was dramatic as we expected him to be. We did have a dramatic move. We did have Euro-dollar fall, as you can see here on the chart, all the way to 107.80, but from there we had some kind of recovery, okay? Currently we're still lower than yesterday. We're at 108.40, but still above support at 108. The move hasn't been that big, okay? We did have some bounce. One of the things that I see is that, well, first of all, what I also wrote on my website and also talked yesterday with Dale. I see here comments. Oh, thanks for the kind words. Thanks for voting for me in the FX Street Awards. Yeah, I still have this Draghi t-shirt. It still smells okay, don't worry. It's a gesture. I bought it from the guys at Forex Live. It's a great initiative that they had. Okay. Anyway, what I wanted to say is that the ECB is not the first central bank to say we're sort of worried about what's going on in China. Draghi, of course, mentioned China. Also about oil prices, also about emerging markets, worries in general. Draghi yesterday was the third central banker. Okay, let's do a quick recap. We had Carney do some carnage to the pound. This crash in the pound, especially the recent crash under 142, because Carney said it's not time to raise rates. Now we can have some kind of recovery, but it's not the only. All in all, the pound is hit hard. Lost a lot of ground against the euro, against the yen, and then we had also talk from the Bank of Japan. We had intensified talk that the Bank of Japan has a rate decision next week, and it'll add more stimulus. We heard that from the Bank of Japan. We heard that from the Japanese government, from the Prime Minister himself, Shinzo Abe. Okay, that it's time for the Bank of Japan to act, and that they're worried about currency. So we had also the yen weakening. Okay, and Draghi was the third one. And who has a rate decision next week? Yeah, the Federal Reserve. So they might also sort of throw the towel, if you wish. They might also not say we're one and done, not say, oh, we made a mistake in December. Of course not. It's also too early to say something like that, but they might also do some easing. Anyway, we have a weaker dollar also against quite a few currencies. Yesterday, the mood in markets improved, partly thanks to Draghi, thanks to the fact that Mario Draghi sort of promised more easing, more free money for everybody. Of course, markets prefer free money from the Fed more than the ECB, but it sort of improved the mood. Look at oil prices. Finally, they made a nice recovery, and a first attempt to break above 30 failed, and then the oil prices fell lower. During this week, we already reached low to about 27.50, and now a recovery yesterday, and finally a breakout in the Asian session above 30, and this one looks a bit more significant, not really a false break. I don't know if it'll go too far or eventually fall, but at least we have something that is more convincing with oil prices, recovery in stocks everywhere. All in all, very cheerful morning, very cheerful afternoon yesterday. So that's what's going on in markets. Yeah, we'll talk about the Kiwi soon. Yeah, okay. Let's talk about more events that we had yesterday. And then, well, talked about euro dollar, it fell, but as I said, well, it could recover. The Fed could also go more easy, and this, yeah, we had a relief rally, and the Bank of Japan's action looks closer. Okay, let's look at a few currencies. So euro dollar here at 108.30 at the moment, on lower ground in comparison to yesterday, but it didn't really go too far. It didn't lose. Eventually, it made a false break under 108. Very tricky currency pair in general, euro dollar. Further support at 107.10, resistance 109, 110, and 110.70. Pound dollar. Yesterday, during some parts of this gloom, it fell under 141. Okay, lost also this level at 141.25, which provided some support. But since then, also good atmosphere in markets, nice recovery for pound dollar, and also made it a bit higher. This line is not that relevant anymore. Maybe this line is more relevant. 142, okay, provides some kind of support resistance at 143.50. Okay, today we have an important release. So we'll talk about events. Dollar yen made it higher. 118. Okay, I think I told you that the line on the sound was 115. I think it was actually, well, when we reached the 115 handle, when we dropped under 116, that's when we began hearing different tunes from the Bank of Japan. And now with this relief rally, there's no need for the safe haven yen. We're currently at 118. I would say 118.30 is some kind of resistance, support around the round number of 118. Perhaps lower, 117.30 also works as support. Dollar CAD. Okay, so the Canadian dollar, what a comeback for the loonie. Earlier this week, with the doom and gloom in markets, the only way was up, but then the Bank of Canada decided not to cut interest rates. First of all, it's waiting for fiscal stimulus from the Canadian government, the new Canadian government, and also, given the huge fall in the value of the Canadian dollar, it also pushes inflation higher and also tells the Bank of Canada that there's no hurry to act because the work is done. Okay, so but with the Bank of Canada not cutting rates, and also with this relief rally, the strengthening in the price of oil, boom, we had dollar CAD fall a lot. Okay, so earlier this week we already touched 147. We're almost there. Currently 142.50. With the low today even a bit lower. I would say here 143.10 is resistance, 144.40 is support. Look how nicely it worked. You could maybe see this as some kind of hidden shoulders pattern. Anyway, dollar CAD in comparison to euro dollar, I think has a much nicer technical behavior. Today we also have important releases. from Canada. Okay. Aussie dollar also here. We had a nice recovery earlier this week. Good news about China, bad news about China. Worries. 68.30 was the new low, the lowest since 2009. From there, we had a recovery. The previous lines do not work so well as they did in the past, but I would say that 69 still works as support. 70 is a bit broken, but still worth watching because it's a round number. 70.65 is the next level of resistance. Australian dollar, better mood in markets. Nothing Australia is specific to Australia yesterday, but in general, the Chinese government said that it's ready to support stock investors, ready to support stock markets. I don't think it's actually new, but we heard it from sort of higher ranking officials in Davos in this World Economic Forum gathering. So it was supportive of the Australian dollar as well. Indirectly, also the Kiwi dollar, of course, enjoyed this relief. 65.30 is the current level, broke above 65. I think 65 continues to work as support. Resistance here at 60. Where are we? 65.80. Okay, so higher ground for the Kiwi. Earlier this week, we had bad news from New Zealand. We had the second fall in oil and milk prices, and also a CPI, Consumer Price Index, which is quarterly, not monthly. In New Zealand, it fell worse, more than expected, so sort of implies rate cuts by the RBNZ, but better mood in markets. Again, stock markets have much more impact than indicators, or not much more, but more than they had in the past. Let's put it this way. Okay, dollar Swiss 101. I think that Swiss authorities are maintaining a higher level of Euro Swiss. That means that, also dollar Swiss moves in tandem, currently staying away from parity, a bit higher, 101.50 is resistance. Euro Swiss, as you can see, since the Swiss National Bank talked about a weaker Swiss franc, was about more than a week ago, we have this range. All the movements in Euro dollar hardly moved Euro Swiss. 110 is resistance, 109 is support. Euro pound, okay, yesterday this reflects the change in mood in markets. A weaker euro, less need for safe haven, and of course Draghi's words specifically for the euro, and the stronger pound sent the pair lower. Still, this is a correction within the uptrend. 76.10, 76 is some kind of support. 77.40, I still see it as resistance. It was an old line back in the fall, in the autumn. Okay, euro, yen. So the euro fell yesterday to new lows against the yen because of this, the Draghi drag. It fell under 126.50. Since then, it recovered because the euro stabilized. 128, still keeping a safe distance from resistance at 129. And pound yen, look at this kind of recovery. Again, this also reflects clearly the change in mood. The trend is clear. The cross is much lower than it used to be, but we had it fall to just under 164, and currently we're at 168. So it's a 400 pip bounce, which is a lot, but in comparison, in general, this cross moves a lot. I know that many traders like it a lot because of the abundance of pips that it allows you. Okay, so we covered quite a few currency pairs. Just take a look at the stock market also. Maybe you look at the daily chart for the S&P. It's a bit messy here, but you see after quite a few days of falls and weak corrections, so finally we have more significant corrections in the S&P, sort of the main US stock market. But for the European session, many times currencies move because of the moves in the Asian stock markets, mostly in Japanese and Chinese ones. Okay, time to talk about events for today. Actually, we already have some things rolling in markets. Okay, because it's PMI morning from market in the Eurozone. Let me try to refresh here so we can see the data. We already have data from France, the second largest economy, and we'll soon have from Germany as well. Okay, so from France, mixed figures. Let me enlarge the font here. So, and Draghi spoke earlier, but I haven't seen headlines. Let me try to get some headlines for that as well. But speaking about PMIs, okay, we have market manufacturing PMI for France. It's just at 50-50 is the border between contraction and growth, okay? That means that manufacturing in France is not moving too fast. And but the services sector is a bit better. It's showing very shallow growth, 50.6, a bit better than 50.2 expected. The composite is, well, just more or less in the middle. At 8:30 GMT, in less than 10 minutes, we have the German manufacturing PMI, probably the most important one because Germany is the biggest country and the manufacturing sector in Germany is very big, very important. Cars, heavy machinery, you name it. Germany is an industrial country. But the services also there is doing better, well, like in many developed countries. Anyway, we're expecting a small slide in manufacturing from 53.2 to 53, and also a similar move in services, but from higher ground. And at 9 GMT, we have all Eurozone figures. The German figures are the most important ones. These are preliminary numbers for January. That means these are fresh figures, and they are forward-looking. Okay, let's see what we have from Draghi early this morning. I see it's mostly a repeat of what he said yesterday. He said that the rate hike in the US was flawlessly executed. So kind words from Mario Draghi to Janet Yellen. He also said that the US hike will signal an improving economy. Oh, well, that's what Yellen said as well. And yeah, I said that, yeah, there's a difference between the United States and Europe. And that's why the monetary policies are going in different directions. Let's see what else. Recovery. I cannot see anything new. He talks about stimulus from accommodating to refugees. He also mentioned that yesterday, that provides some fiscal stimulus. He's not optimistic on oil prices. Well, he said that yesterday as well. And I cannot see really anything that he didn't say yesterday. Well, he didn't have to do damage control last time in the previous ECB decision. He did a lot, but markets expected him to do more. Euro-dollar jumped 460 pips from the bottom to the top. It was not what he wanted. He then had a speech in New York the following day, and he tried to do damage control, tried to explain it. When he was asked if he was disappointed from the market reaction, he stuttered a bit and eventually said, well, yeah, sort of with this sad face of his. Yesterday he didn't have this sad face. He looks very determined. Super Mario as we know him, and it worked for him quite well. I guess he wanted a weaker euro-dollar, but he did trigger rally in stock markets, and that's also a win for Draghi. Let's see if I can find another. Well, he says the Greek situation is better. Anyway, nothing new. We have a question here. Do you think the markets believe Draghi is crying wolf again, or will they drive the euro down this time? Well, my answer to that is I think Draghi learned his lesson from last time. Well, all in all, he's a very successful central banker. He's my favorite, and I'll show you the T-shirt later once again. I think he's really a rock star. Last time, it was one of his only times that it didn't work well for him, because the expectations that he had created were so huge that it didn't work out. This time, what did he do? He said, look, the situation did deteriorate, and that's the truth, because inflation did fall, okay? And he also said that they're ready to act in March. All right, and the markets did believe him, so he still has lots of credibility. But he didn't say exactly what, so he didn't create specific expectations that can be missed. So what I think about euro dollar doesn't mean that euro dollar is going to fall, because, as I said, the ECB is the third central bank this week, or even the fourth if you count China, is saying, "Don't worry, investors, we are at your side." Even the Bank of Canada that didn't cut said that they have an easing bias, and that more or less the government stopped them from doing that. Okay, so you see, you can count all these central banks, including from the number 2 economy in the world, China, or number 2, you can also see it as the Eurozone, and from Japan, number 3, with the Bank of Japan ready to act, and from number 6, I think, it's the UK, and a very influential central bank, of course. And you think, who's next? Okay, next week we have New Zealand, and more importantly, the Fed. Okay, no press conference, no new forecast, but the Fed can easily tilt to the dovish side. Fall in oil prices can hurt the economy in the United States. The fall in inflation resulting from oil prices worries about other indicators. Another thing to watch, we'll talk about that in the preview for next week, is that next week we'll have the initial GDP figures for the United States for Q4. And they will be released on Friday, but the Fed will likely have them already, on Wednesday when it makes its decision. So the Fed could be next to you, so it doesn't mean euro dollar will go down. If we hear something dovish from the Fed, and the Fed is usually dovish, we could have euro dollar jump. Okay, so it's a global currency war, and that's where we are now. Okay, let's talk about more events today. And wait, I think we have some questions here. So, I think Marx, yeah. You remember, Sinatra says, you remember I said 4 weeks ago, the refugee crisis stimulating the economy, yet nobody likes to talk about the fortune they make out of the crisis. I believe it to be a very short-lived phenomenon, though. Anybody watch the movie? You see, I didn't governed by a rock star. I didn't see that movie. I think in general, fiscal stimulus is much needed in the Eurozone. So I think it's if it's supporting refugees, if it's France breaking its budget because of security costs, and some of it will not go exactly to security, if it's a new government that will come here in Spain at some point, and today the king is supposed to announce who will try to form the government. It'll take time, but I believe the new government will enact some more less austerity and more stimulus. The government in Canada is doing so I believe fiscal stimulus will help in general. Another comment here, the full recovery to old prices near $1 didn't look promising. Doesn't it mean markets didn't believe him? No, I think they do believe him, but they also expect the Fed to act. That's what I see. Okay, and also remember that euro is also naturally bid with the trade surplus. Yeah, last words of Drag yesterday, we will not give up. Yeah, that was sort of the final. He's a rock star. And yesterday was one of his best performances. Euro dollar is weaker, but I think markets are awaiting the Fed as well. The media did not want to believe him yesterday, and there was lots of dispute in the latter part of the interview session. Yeah, he was asked lots of questions. I think he was asked about the state of. It was asked, well, oil prices are helping the economy. Why should you act? Isn't this kind of good deflation? He said, no, it's also reaching core prices, and we have to act, and that's our mandate. He was also asked questions about the banking sector. He dodged answers over there. I think that there's one Italian bank that is in trouble. We know that it's not. And we know that Deutsche Bank, for example, reported losses. So that could be a crisis in brewing on the sort of on the sidelines, but with so much support from the ECB, perhaps the banks are going to keep on floating quite well. Okay, is the Fed will the Fed act to weaken the US dollar, and where do you see euro dollar? Well, I don't think the Fed will act specifically to weaken the US dollar, okay, but they will act to tell stock markets, which they care about, that don't worry, we are by your side. Okay, euro dollar, I believe, will be stuck in range until next week. It could be the current range of 108 to 109, or it can be a bit wider, 1710 to 110. But Draghi did move the euro, but he didn't move it enough. He didn't announce anything groundbreaking that sort of killed the euro, or didn't go all hawkish and all relaxed to send the euro shooting higher. So it was weakening of the euro. Perhaps the euro will remain under pressure, but markets are already looking towards the Fed. Okay. Let's talk about more events that we have today on the agenda. So, well, we have let's look at the German PMI soon when it's released. It's in a few minutes' time. At 9:30 GMT, we have retail sales from the United Kingdom. Let's look at the expectations over there. It always moves the pound. Well, of course, stock markets recently moved the pound even more, but retail sales are expected to fall 0.3 month over month. In December, last time they jumped 1.7%, and year over year, we're expecting a more moderate rise of 4.3 in comparison to 5%. Okay, there's also the core retail sales, excluding fuel. Yeah, that could have an impact because fuel prices are sliding, but usually the headline figures are more important in the UK than the core figures. We also have public sector net borrowing expected to be a bit lower than last time, less government borrowing, overshadowed clearly by retail sales. I mean, it might be important politically for the government, but not in terms of markets. Retail sales in Canada. In Canada, we have a double feature of retail sales and inflation data to move the recovering Canadian dollar. Retail sales are, and we should look at, of course, core and non-core figures. Month over month, plus 0.2, excluding autos or cars, plus 0.4. We also have the CPI, which is important, of course. I think most of them are, I mean, the Bank of Canada moves according to inflation, but we have also retail sales, also important. Remember that core inflation in Canada is not too shabby, okay? I don't have the, Yeah, the consumer price index is, the core inflation here is 2% year over year. It's not too bad. The weaker Canadian dollar did support inflation in Canada. So that also gives the Bank of Canada a reason not to act. I soon have my opinion about the Kiwi instruments with limits. I see questions here. So it's a double feature for Canada, but it could be confusing. We need both figures to go in the same direction in order to move markets. If they are both positive, it's positive for the Canadian dollar. And of course, if they're both negative, it's bad. But of course, oil prices matter a lot. And the figures could also be mixed, making us all confused. We have, towards the end of the day, the market flash manufacturing PMI. It's the market one is less important than the ISM one in the United States. Okay, so expected to show slightly weaker. It could be even much weaker because we know manufacturing in the US doesn't look good. And then existing home sales, which are expected to bounce back from 4.76 to 5.2 million. These are annualized figures, and in general rise by 8.9% after a plunge of 10% over 10% last time. Okay. Slightly worse German figures. Let's take a look at that right now. Yeah, 52.1 is the actual figure of the manufacturing PMI. It's a bit worrying. The locomotive, as it's often called, Germany of the Eurozone is not growing fast or is not expected to grow fast. And also services, slightly worse than expected. I would not take this too seriously, but only now it's a miss on both figures. So, and in the composite, it's a drop of 1 point. So it's, worse than expected. Not a disaster, but not so good as well. Okay, so we have, let's see if we have any kind of reaction in euro dollar. Not really. Draghi is more important, and so are stocks. Okay, regarding the Kiwi, they said the Kiwi had a bad week initially because of the CPI and milk prices, but then the better mood in markets helped the situation improve. Next week, we have rate decision in New Zealand. They're not expected to change rates because last time they said sort of we're done for now. We're at the historic low of 2.5%. But of course, given the deterioration in inflation, in milk, in China, in the global outlook, they could always cut rates, and they did surprise markets a few times in the past. All right, so you can never know. I don't think they'll act. I think that they, with the weakness of the Kiwi in general, they could do what the Bank of Canada did, leave the door open, perhaps go more dovish than last time, but not cut interest rates. And this could be a bit supportive for the Kiwi. All right. Remember that the rate decision in New Zealand is just an hour after the United States. Okay. Any more questions? We'll do a full preview of next week's events after the wrap up for today. Draghi was speaking of instruments without limits. Yeah, which means we're ready to act, and we won't tell you how, because we actually don't know how. He did say that there's lots of technical work to do. So let's see if they really get their technicians doing the work. Basically, they're scrambling for more tools. It can be ABS buys, asset-backed securities, more government bonds. I would suggest them to invest, as I heard from ex-finance minister of Greece, Yanis Varoufakis, to invest in the European Investment Bank, the EIB. And this EIB bonds, these kind of EIB bonds could be used for stimulus, for infrastructure projects in the old continent. That could help as well. But that could be politically charged, of course. Specifically here in Spain, infrastructure is excellent. We don't need, I don't think we need something extra. Actually, there are too many airports here, but other countries, including in East Germany, for example, including the famous German autobahns, could use some repair, and any kind of fiscal stimulus, I think, would help. He did talk about that governments need to do more. Didn't talk about fiscal stimulus, but more about reforms. So not all depends on the ECB, but for currency markets, a lot depends on central banks, of course, more than anything else. Right? Okay, let's begin the wrap up for today a bit early. Still, the mood looks positive. And then we'll do a long preview of next week, which is very busy. Hot pairs today. Well, we have the pound really after the show, and then the Canadian dollar because of the double feature in Canada. And in general, look at the Canadian dollar this week. It's been, I know that it's not a popular currency pair, not a popular currency, but it's been quite exciting, quite a roller coaster. And it ain't over yet because you have the closing of oil, closing of stocks, and of course the double feature in Canada. What can move euro dollar today? Yeah, we didn't see too much from PMIs nor from Draghi, so it'll be more the mood in markets, oil prices, China, and a few US figures, but not that much. So maybe existing home sales because it's the last important release for the day, and can have more of an impact, but not so much. I think it's more the mood. Let's see if this positive mood and finally a more significant correction, if it can last until the end of the week or we'll get back to the doom and gloom. This is the relatively bigger pause, bigger correction in comparison to what we've seen earlier in the week. Okay, so it's not always one-way street, but it's been sort of 90% negative, 10% positive, and now it's sort of a much more positive correction. Okay. You have a comment from Sinatra. You're in Germany, right? Eastern German, Autobahn is perfect. Western German, crumbling or stuck in corrupt companies building faults. Okay, thanks for this information. I didn't really know that, but I've been last time about 2 years ago to Western Germany, to Hanover and Hamburg. And well, it's very rich and developed countries, but you see that a little bit of investment could help over there, even though Hamburg is a very rich city. So I don't know if there's also corruption involved over there. I know that according to some allegations, roads here in Catalonia, which are excellent, well, you have to pay quite a lot to ride them, and that's because of corruption. Sorry, positive correction. You mean euro-dollar going up or down? No, I mean stock markets in general. The mood, positive correction for. When I speak about a correction, I speak about a weaker euro and a weaker yen, and all other assets going up, commodity currencies, the pound, stocks, oil, everything. Okay. All right. So let's talk about the wrap up. Let's do the wrap up for today. What is happening in dollar yen? Well, before we reach the wrap up, dollar yen is going up because of talk about. You're in Hamburg. Okay. For cable, it depends a lot on the retail sales figures for the next hour or so. Is it a temporary rally? This depends on the mood in markets. So for the next hour, it's retail sales, and then afterwards it's the mood in markets. Currently positive, supportive of the pound. Southern Germany is better than the north as well. Okay. Southern Germany is prettier than the north. Well, in terms of nature, at least. I've been to the south there. Anyway, let's begin the wrap up for today. Let's begin with this guy, Mario Draghi. Let's see if I can show you my T-shirt, courtesy of Forex Live. This is also Dale Pinkert has this T-shirt. Here's rock and roll Draghi. Okay, and I think yesterday he did his rock star thing. Let's go back to the chart and see what he did. So this is the fall in euro dollar. Boom, right here. Not huge, but we fell under 108. That was a false break, 107.80. And then moving up again, but in general, euro dollar is slightly weaker. What did Draghi say? What did Draghi do? He reported new downside risks emerging in 2016. That's emerging markets. China, oil prices that fell 40% since the cutoff for the ECB forecasts, the previous ones, and that they're ready to act in March when they'll have new forecasts, including those for 2018. So euro dollar did lose some ground, didn't go too fast. My explanation is that it's the fourth central bank, if you wish, to warn about the deteriorating situation in China, emerging markets, inflation, oil, everything. Stocks, of course, they're very sensitive. So we're expecting also the Fed to back off. And we've seen in the past week or two that chances for rate hike in the US for March are lower. In addition, we had, thanks to Draghi and also thanks to a small rise in, a drop in distillates of oil, not crude oil, that we had a rally in oil prices back above 30, a rally in stocks, a rally in commodity currencies, in the pound, a weaker euro, and a weaker yen. Now, the yen is also moving on its own because on Wednesday already we had the Bank of Japan talking about action coming up, okay? They don't like the strength of the yen, they don't like the safe haven yen, especially against the rivals in China, but also against the euro and the dollar, and a lot more against, of course, commodity currencies in the pound. The yen is less competitive, and they can also allow themselves a weaker yen, okay, because of falling oil prices. So let's look a bit at charts. Sorry for that. Euro dollar ranges are 108 to 109. Above that, 109.50, 110, and 110.70 to the downside, 107.10. Pound dollar currently on a recovery path, 142.50. 143.50 is resistance. 142 works as support, followed by 141.25. Dollar yen getting closer to resistance here at 118.30. Support, well, around 118, but it's not that strong. 117.30. And we learned that 116 is sort of the line in the sand for the Bank of Japan. Dollar CAD, amazing recovery for the Canadian dollar. 142.40 at the moment, 143.10 and 144.40, 146 and 147. These are the lines, but we're clearly on some kind of recovery. And yeah, 142 is support for CAD. Aussie dollar also on a recovery path, crossed the 70 line. 70.65 is further resistance. 69 is clear support, but the lines here are still trying to find new ground. 68.30 is the clear line of support, even a double bottom if you wish. And Kiwi dollar, it's 65.20, broke above 65. 65.80 is resistance, despite a fall to lower lows this week. And the Kiwi, we're currently on a recovery path over there because of the better mood in markets. Okay, today we have had PMIs which were slightly worse than expected, especially in Germany. Didn't move the euro too much. We have retail sales in the UK. I'm sure it'll move. The pound, we have the Bank of England, John Cunliffe, I hope I'm pronouncing it correctly, speaking at 12 GMT. Carney already killed the pound earlier this week. Let's see if his colleague can also do something. Canadian retail sales and CPI, double feature from Canada at 1:30 GMT. Especially if they go in the same direction, it should be a significant mover for the loonie. And I would say second-tier figures in the US, but they're the last for the week, so they'll have the last word. Like Draghi yesterday had the last word by saying, we never give up. So existing home sales could have an impact, a bit more than the market flash manufacturing PMI. So these are the events for today, and we'll get to the preview for next week. Before that, let's answer a few questions. Yeah, I love cattle and motorways. They only ride them at my contractor's cost. Good for you, because I went on vacation and paid a lot for the motorways, but yeah, they're at least high quality. Can we shoot dollar yen up now? Yeah, because we're expecting stimulus from the Bank of Japan, so maybe there's more upside. Thank you, Fabian, for the kind words. Can you post a link to buy that t-shirt? Well, it's supposed to be at Forex Live, so look for it over there. I'll try to look for it later on. I bought it before Christmas. I hope it's still on sale. Your Brinks truck arrived. Thanks. What do you say? Oil stocks commodity? Isn't oil a commodity? Yeah, oil is a commodity, but maybe sometimes I talk about this separately because, well, I refer to iron ore and copper and things like that. Oil is sort of in a league of its own, but most of the time everything moves together. Oil, iron, copper, soybeans, and milk. But milk is a soft commodity and also more stable. Oil is, of course, the #1 commodity in the world. Crude stalling under its 200 simple moving average in the hourly. Yeah, oil prices, well, you know, things didn't change fundamentally. We still have too much supply and not enough demand. Yeah, thank you, Jax. Yeah, we're still not over. Yeah, we still have the preview for next week. Okay, let's begin the preview for next week. So this is a preview for the last week of January, 25 to 29. Okay, it's going to be a busy week. Not only the first week is important, also the last week. Monday, with the German IFO Business Climate, Germany's #1 think tank, will say what they think businessmen think about the economy in Germany. That means a refugee crisis, Volkswagen crisis, Chinese demand, and you name it, inflation, ECB support. More importantly, on Tuesday, we get things warming up with another speech from Carney. He is always there to potentially provide some courage. and consumer confidence from the US, the CB1 also for January. Let's see if the additional money that consumers have in their pockets is helping confidence and implying higher spending. Wednesday is the really big day. Begins for those of you trading the Aussie with the quarterly inflation figures from Australia to determine the next decision by the Reserve Bank of Australia. In February, they had a break in January. Oil inventories, as every week, they have a lot of impact. And of course, the Fed decision. And that's, I think, one of the reasons that Eurodollar is not making a huge move. That's because the Fed could say that they're worried about that the situation has deteriorated. We're there to support stock markets. They will leave the door open for March. They will not admit that they made a mistake in December. I also don't think they made a mistake. But I think they'll be more dovish on inflation, unemployment. Inflation and employment were not that bad, but other figures regarding the economy, retail sales, manufacturing, they don't look good. And the Fed will have the GDP figures in front of their eyes. So we could also have the Fed hinting us for Friday's GDP. If the Fed has a good GDP read in front of its eyes, and if it remains optimistic and determined about the economy, then we could go hawkish. That means a stronger US dollar across the board, of course, stronger against commodities and the pound. And of course, just an hour afterwards, we have the decision by the RBNZ. I don't expect them to cut unless the Kiwi jumps from now until Wednesday. I think they'll keep their powder dry, their ammunition, their barrel, whatever you want, and wait for a few more developments, despite the deterioration in markets, despite the fall in inflation in New Zealand. Okay, that's not all. On Thursday, we have echoes from the Fed, of course, and UK GDP, a preliminary read for Q4. Let's see how it goes. Durable goods orders from the United States. Also, this figure will be available for the Fed, I believe, before they make their decision. It has long-term implications. It's the durable goods orders released for December, the final one for 2015, and the core one reflects investment. Very important figure. And on Friday, also an important close, strong close to the week. Bank of Japan's rate decisions are currently expected to announce more QE, battling the weak, the strong yen, battling weak inflation in Japan, succumbing to pressure from the central government. But it's nothing is certain. Okay, this is just the development of the past week. And then we have GDP from the United States. I don't have the official expectations, but it's expected to be very weak, around 1% annualized. And in Canada, also GDP for it's for the month of November. It's monthly GDP in Canada. So we have really busy week, and also end of month. It's been a busy one. End of month adjustments. Not as busy as I wanted in Eurodollar, but quite busy in quite a few currencies. Okay. Question here, no economic indicators from the Eurozone excluding the UK. We have the IFO German figures. Maybe I missed something of importance. I think we have actually inflation numbers, I hope. Let's look at the calendar. I think maybe I did miss inflation figures in Europe, the preliminary ones, which are more important than the final ones. So let me just take a look at that. Anyway, they're less important because we already had the ECB decision behind us. That doesn't mean they will not move markets, just less important than when they're before the ECB decision. No, maybe I'm confused with another week. Anyway, we'll be here next week. We have the monetary figures from the Eurozone. Oh, yes, here it is. On. This is Friday, actually. So another big event for Friday. Again, not close, not adjacent to the ECB's decision, but still of importance. The consumer price index, preliminary for January in the Eurozone. Usually the day before it's from Germany. So should be interesting as well. Okay, euro dollar in the hands of USD and stock market moves, mostly so. Yeah, not only the US dollar, but also the mood in markets: bad mood, strong euro; good mood, weak euro. Remember, the yen moves more according to the flutes of markets, but also the euro is a safe haven currency. But with stimulus coming for both central banks, this strong correlation with the safe haven currencies could crumble down just a bit. Okay, let's see how things evolve. Anyway, we have a slightly weaker euro, not a disaster, not a crash. An interesting close to this week, another very interesting week next week. Hopefully Eurodollar will join its peers and move more, enjoy the volatility that the pound enjoys, the Canadian dollar enjoys, and even the yen is moving more than the euro. Hopefully things will be more exciting for Eurodollar as well. Okay, so yeah, I guess that's it for today. Thank you everybody for coming. I hope you like the t-shirt. Go to Forex Live. Adam Button, Ryan Littlestone, and their colleagues have produced this great t-shirt, and they have a nice website as well. Continue watching FX Street's shows. We have live coverages. Mauricio is working on more shows as well. And we have the FX Street Awards, lots of great candidates there. And you're welcome to vote, participate, send it out to your friends, whatever. Anyway, have a great weekend, invest responsibly, and see you next week. So that's it. And bye-bye. Thank you.